Also welcome on board Anand Tandon too. Anand, hi, afternoon. What an excruciating week this has been. Do you sense that a major part of the pain is behind us, or do you think next week could very well be the same?
I think it's too early to say that we are out of the woods. I think the market has just shown some sign of weakness, both locally as well as globally, and there is a good reason to assume that some of that can continue to uh, persist for a while. I mean, if you were to listen to the biggest investor in the world, they are Berkshire is sitting on mountains of cash, which they don't seem to be able to deploy, which itself seems to imply that they are not finding the opportunities in the market, and that pretty much reflects what's happening in the market globally.
Point taken. So yes, the best and the biggest investors sitting on cash, and perhaps in India as well, we have seen that the cash levels at mutual funds have been slightly higher, though the SIP numbers continue to be fairly strong over the mark of 20,000 is what we had seen. The asset quality for Bank of Baroda seems to be a bit of a worrying factor, and that's the reason the stock had shot up but has corrected now and has actually moved into the red, and that's because the fresh slippage number is actually higher at 2,900 odd crores thereabouts versus 2,500 crore that we had seen last quarter. The overall provisioning has gone up. The net NPA has worsened a bit. So overall, a bit of a weakness on Bank of Baroda. In fact, Anand, overall the public sector banking names, I mean, we saw a very strong show coming in from SBI. Bank of Baroda has been a bit mixed. PNB was also above estimates. Would it change your view in terms of the PSU banks as a whole, or even within the sector a bit of a churn?
Well, the performance of the entire banking sector has to be reasonably decent. The margins may have peaked out, but in terms of the growth numbers, I don't think that you are still looking at least another 18 months, perhaps, of fairly strong performance before any issues come through. So I would imagine that most banks will actually report fairly good numbers. Now, whether or not you want to pay for it consistently is a different matter. I think the challenge for most banks today is on the liability side, not so much the asset side. And therefore, companies which have strong liability franchise and are able to raise deposits will be the ones that will benefit. Barring, companies which are going through their own issues, like a Kotak or an HDFC, which are specific to them, the trend in the sector is fairly positive. If you look at, for example, the housing finance numbers among the smaller companies, they have been sterling. So that kind of demand continues to come through. I would argue that if you are looking for banking, you would look for those which have got the strongest banking franchise. Clearly, SBI and the private sector, leading private sector banks qualify. Bank of Baroda is also among those which among the public sector banks which can do quite well. The likes of PNB, etc., I have a little more hesitance in saying that they will continue to do great things because of the fact that their past has been rather checkered. And while currently they are doing reasonably okay, their valuations are strongly catching up. So from here on, there's very little choose between most of the banks, at least among the frontline ones. And I think you will get the same kind of performance pretty much across the board from most of the frontline banks for the next, as I said, 12 to 18 months. It is only after that the differentiation is likely to start.
Right. Okay. That's really the take coming in on which way the market tilt is going to head. But just, analyzing some numbers as well, and you've got Tata Motors as well as Eicher too. Let me quickly take it across to Shrishti and find out what we're penciling in.
Well, yes, the trend does suggest that the auto companies are posting good set of numbers, not just the numbers, as well as the commentaries on the positive side. Similar kind of an expectation is what we are having from Tata Motors as well as Eicher Motors. Firstly, let's talk about Tata Motors here. The key to watch will be the JLR EBIT margins, because once again, we are expecting an improvement in that particular number. 80 basis points on uptick is what we are expecting, and 9.8% is the expectation there. While if we look at the India business, that's not quite a mixed bag this time around, though the commercial vehicle volumes were not that great. The passenger vehicle volumes have done pretty well, and this time all in all we are expecting an EBITDA margin jump on the back of the price hikes and improvement in the volumes as well, and 40 to 80 basis points of increase on a quarter-on-quarter basis is what we are expecting on the margins of both of these segments. Other than that, on the consolidated basis, RI will be on the margin figure. 14.1% is the expectation there, so any beat will be taken positively. Profit expected at 6,255 crores crores, while the revenue expectation is of 1.2 lakh crores. Other than that, the commentary related to the demand outlook, especially for their JLR division, which has been doing pretty well with the higher sales of the UVs, will be the key to watch. Now let's talk about Eicher Motors then. This time the mix was indeed quite good, because sequentially there has been a jump of 24% in the Eicher Motors VECV volumes, and that's expected to support. All in all, we are expecting an increase of 60 basis points on a quarter-on-quarter basis in terms of the margin. 26.6% is the expectation there, while the Royal Enfield margins are expected to be just flat sequentially at 27.5%. The company has improved the category and the mix of 350 plus cc category improvement on a YOY basis, and that's expected to support. Profit figure expected at 933 crores, while the revenue expected at 4,228 crores. Here too, the outlook will be on the demand outlook will be the key to watch. So all in all, good expectation from both of these companies.
Good expectations. Let's see what they deliver. The rest of the auto pack has actually done quite okay. So the case is perhaps that it's going to be a better set rather than the weak number. Anand, would you buy that argument? Because of late, whether it's FMCG companies, paint companies, auto companies, they're all talking about a rural recovery.
There is a rural recovery maybe, but the overall consumption continues to remain somewhat weak. I mean, if you look at overall the numbers that we have seen so far, the place where the consumption is going strongest is still the premium segment, whether you take real estate or you take, for example, even in the car segment, it's the SUVs and the larger SUVs which have been gaining market share. The two-wheelers, while they have done reasonably well recently, are still below COVID levels. So, you still have to see a major pickup there. Broadly, we remain a market which is at the higher end in terms of the consumption. The lower end is perhaps showing some signs of pickup, but, there is no particular reason to be very buoyant there. The consumer in India is now highly leveraged. He is now at a 15-year peak in terms of borrowing, and the savings rate is continuously going down. So I think you are still going to look for a situation where the market will be at the premium end and not so much at the bottom end. And that would pretty much define, how you would look at all the consumers. That said, given the fact that FMCG has underperformed, it is very likely that you will see some, renewed interest there for the lack of other opportunities. But it's not something which is growing anytime very strongly. The best of the results are still looking at single digit or just about double digit kind of volume growth.
Because, Morgan Stanley as well has downgraded a bunch of these FMCG plays. Just in a note yesterday, they've downgraded Britannia now, cut the target price to 5,021. A downgrade coming in Dabur too, to an equal weight. Price target now slashed to 500. Similarly on Unilever. ITC though, they maintain overweight, but ITC again is not a pure play FMCG company. Tata Consumer maintain their overweight. And so is the case for Varun Beverages as well. But Anand, to the point that you were just making, the urban or upper end or premium end of consumption is extremely high valuation as well. So where is it that you still find opportunity on the table, or at least growth visibility going forward?
Well, that's exactly the challenge in the market, isn't it? That there isn't that much growth and price that is attractive. Wherever there is growth, the prices are more than factored in all of those growth and then some. In fact, the market is probably extrapolating the growth in a manner which assumes that there will be no hiccups at all going forward. Whereas, as I said, you are looking at a situation where the Indian consumer is now no more, seriously under-leveraged. They are one of the more leveraged among the emerging markets. And in terms of the income to leverage ratio, they are one of the highest. And in absolute terms, leverage with the Indian consumer is now, at a 15-year high, which is saying something. So you will look at a shrinking kind of consumption basket, and that is why probably you are still looking at people looking at construction and defense and government-led infrastructure initiatives as the place to be, simply because there at least you hope that there will be some consistent demand growth and the order books will materialize. Now, that said, again, if you see the defense companies, many of the expected orders are moving over to the next year. There is a constraint in terms of how much the government can spend in a particular year, and that is now going to have to play through. So while it remains a multi-year theme, and probably some of the companies may continue to do reasonably well, I don't know whether there is the kind of buoyancy that we are seeing in the market is fully justified.
Point taken. So that's the answer coming in on defense, industrials, and the overall pack at this point of time. Just wanted to highlight a few more other names as well before we move forward. Take a look at Hindustan Zinc. That spiked as much as 13%, and it's having a rub-off impact on Vedanta as well. That stock too is high. Before I take it across to Vinny for Zomato, let me quickly get in Naresh's view on these metal names, Hindustan Zinc and Vedanta. Naresh?
Hindustan Zinc is a little overbought in the short term. Vedanta has gone through a small consolidation, but the trend still remains positive. The breakout was huge, follow-up has been huge, but for the last 10 days, it has been consolidating. So Vedanta still looks okay till the time it holds above the 380, 390 mark. The other names which look interesting is a Hindalco, which has given a big cup and handle breakout and sustaining above 620. So that could be the next leader in the metal pack.
Right, okay. Important one from a market perspective. Zomato, that also is going to be coming out with its numbers. So let me take it across to Vinny, try and understand what the street is penciling in, not just for Zomato, I guess, Vinny, but more importantly for Blinkit.
Absolutely. Blinkit is going to be the key focus, right? Because Q1 FY25, when they have given the target that they will be achieving that adjusted EBITDA, and some analysts are expecting that maybe it could be possible that this time Blinkit also could become adjusted EBITDA, but that's what we're watching out for in terms of commentary. Other than that, overall on a consolidated basis, the Zomato revenue, we're expecting a growth of around 11%. Profits also, we are expecting a decent growth. And in terms of EBITDA, the normal EBITDA, that's calculated EBITDA, we're expecting it at 173 crores versus 126 crores, which is a growth of around 37% versus last quarter. Margins expected to be stable at 4.8% versus around 4% last quarter. Food delivery business expected to see good growth trends, continuing the focus that is there on platform fees that are taken an increase. So that is something that has been supporting the growth there. You know, will they be taking more platform fee hikes? That's something we'll watch out for in the commentary. Average order value is expected to remain flattish sequentially, while in terms of the gross order value for Blinkit, we're expecting it to be in the range of around 12 to 13% sequentially, as well as in terms of revenue growth for Blinkit, expected somewhere at 18%. Even the hyperpure business, that has been doing very well. That's doing a strong performance in the last few quarters, and that is also expected to see us around a double-digit growth or high single-digit growth, you could say. So 9 to 10% growth is what we could expect there. Let's watch out for the growth in food delivery, increase in platform fee, any more expectations on that front, as well as any update latest in terms of Blinkit, and the target to achieve that adjusted EBITDA positive for Blinkit is a key factor to watch out for.
So that, of course, the numbers will come out post-market hours on Monday, but the stock has started reacting a bit already. Let's pull up the intraday chart, and in the last 20 minutes or so, there has been an uptick on Zomato, not by a whole lot, but at least it's high by around 3%. But it's a day of Akshay Tritiya, the day where people believe it's auspicious to buy certain metals, precious metals like silver and gold specifically, and the stocks of Kalyan, Jeweler, Muthoot, Manappuram, all of these are actually doing quite well. In the last few minutes, there has been a sizable uptick on that one. Anand, what's your view on Manappuram as well as Muthoot? Because these two names were beaten down after that RBI, 20,000 limit on cash dispersal had come. But would you be buyer in these dips on these names?
If you like the space, there is no reason to not look at the fact that they are a little cheaper or were a little cheaper till a while back. The RBI action, is not likely to make any major impact if it is taken across the industry. I mean, frankly, if the buyer or the borrower doesn't have a choice between taking money in cash versus taking it through his UPI or bank account, he will take whatever he needs to if he has to. It is only because there is some amount of arbitrage between one company and the next in terms of whether they can take cash or not. There is some effect. Now, there may be some move towards the unorganized sector if people are a little cagey about taking money through official channels. But that is not likely to be material. And more importantly, the unorganized sector is not likely to be able to have the same resources to be able to grow the book as efficiently as the organized sector can. So I think that RBI action should only help to increase the size of the visible industry and will not have any lasting impact. So overall, the call really you're taking is whether or not the business, the underlying business is good enough to be investing in. And by and large, the growth is fairly strong there.
Right, okay, and you can see most of those jewelry stocks actually hold out very well. But you know what's not holding out well? BOB, that after its numbers, and especially given that both NPAs as well as provisioning came in much higher than anticipated, that stock has taken quite a tumble. It's now down 4%, and that's almost 5.5% off from the day's highs. Let me take it across to Gaurav and get in more details on the numbers. Gaurav?
When we talk about profitability, the bank has actually performed the number which was actually more than what the street was expecting. So, for example, net interest income increased almost by 2.3%. PPOP was actually flat on a YY basis, but if you look at profitability, that increased almost by 2.3% again on a YY basis. But what has happened in this quarter is that provisions, if you look at this number, this has gone up almost by 95% on a sequential basis. Apart from that, if you look at fresh slippages, now this number has increased almost by 20% on a sequential basis. This stands somewhere around 2,855 crore rupees, and the slippage ratio also as a result has gone up to 1.12%. Talking about the GNPAs and NNPAs now, while GNPAs have actually improved, but if we talk about net NPAs, that have actually increased almost by 5 basis points on a quarter-on-quarter basis. And lastly, if you look at credit cost also, that has also gone up to 0.57% versus what it was at 0.39% on a quarter-on-quarter basis. If we talk about profitability, the net interest margin had actually improved for the bank. It has gone up almost by 17 bips on a sequential basis to 3.27%. But it seems that the asset quality is a concern which is happening in Q4 FY24 for the bank, and as a result we saw that bank actually nosedived almost by 4% in a day to day. So definitely watching out on how the commentary is coming up from management, but for now the numbers seems to be on profitability, it seems to be above expectation, but on asset quality it seems that the bank has delivered below expectation results in Q4 FY24.
Gaurav, thanks so much for that. That stock is clearly tumbling and it's having an impact on the rest of the PSU names as well. I mean, SBI, the earnings are already out, so shouldn't be a reason to react, but it's definitely down. And since BOB numbers have actually come, there's an additional downtick that has come there. Other PSU names will also come up for you on the screen, and the PSU index itself as well, because the entire banking index is actually under pressure right now, whether it's Punjab Sind Bank, Bank of India, even other names from the entire banking space have all seen a bit of a tumble in the last few minutes itself. But the week hasn't been that great for the Nifty. It's perhaps a week which is trading to be one of the weakest in this year so far. The FIS sell figure in the month of March has been over 23,000 odd crores already. India VIX had shot up as much as 80% from April lows, and the fact that the shorts had accumulated in the system quite a bit. Within all of this, Anand, have you managed to kind of keep your buying list ready that on these dips that you're looking at, adding positions into those names, those sectors or themes?
Well, as I said, I think there is some more way to go for the market before one starts to look at buying. Given the fact that we are moving into a very major event, and that is the election results coming through in another few weeks, I had been recommending that one should be a little easy in the positions or buy some protection, because the expectations were running again ahead in terms of what could possibly be delivered. I think the market is beginning to see some of that, and what perhaps you're looking at is a little bit of a reaction to that as well, besides, of course, the valuation and the global macros. So at this stage, I would still remain somewhat light and keep some cash available. There is time to buy on a longer term basis, after the events are over. It's not as if the market has great upside from here in the near term.
Okay, just heading in to close around 9 odd minutes or so. Naresh, let's get some BTST ideas from you.
This is a buy on Bharti Airtel, which has been trying to cross a 4-day high and showing a lot of relative strength. Stop loss at 1290, target price of 1330. Second is a buy on UPL, which has seen very strong price volume action today. Stop loss at 484, a target price of 510.
Okay, so those are some of the top recommendations. UPL, despite that uptick, Naresh is quite, positive on that counter. But since, even Anand was talking about how elections is the biggest thing to watch out for, markets and mandate, that's a conversation we've been having with a whole host of experts as well. Today, of course, we spoke with Sandeep Tandon to get a sense as to how he's been able to spot the, better of the ideas so far, and what would it mean in terms of the election volatility. Listen into a slice of that conversation.
Global market also correct, then we will also tend to follow. But the global market remains stable, then I think the reaction will be more positive out there. But I think one has to be very clear. I have been very vocal about for a while that we have saying that easy phase of bull is over in India also. Okay, but you should be very clear. We are in decisive bull run. Okay, so buy on dips, long-term strategy will play out. but we are in difficult phase of bull run. So we are in bull run, but we are in difficult phase of bull run. So one should not conclude that market, like a lot of people are talking about, market has peaked down, valuation has been very expensive for more than 1 year. This narrative I'm hearing, but market doesn't correct. If correct, they come with the in a ferocious manner back. Okay, all the value thesis comes back, PSU comes back, metals come back, pharma comes back. You look at the new leaders which have been seeing in last 1 year, they come back with a vengeance. Okay. With that background, I will still believe India is buy on dip. So I will look for, as a mutual fund, as an institution house, we will be looking for a buying opportunity because we remain very constructive on India's equity, and India will emerge as a unique asset class over a period of next few years. So Nikunj, is not only in the month of May, FIs has been seller for a while. And now if you really sit down and analyze their characteristic, yes, we can say FI ownership at 11 years, which is one of the lowest. Okay. But what is very important to understand, they used to run very concentrated holding in the past. If you can recollect, few banks, few technology company, few FMCG, and few consumption name. That was their thesis. So the very concentrated bets were there. Now, obviously, those admired and all these stocks which they own were, as part of our thesis, were part of the admired territory, which has peaked out in September 2021 and it's still correcting. Now, with that background, what we have noticed is that they are pruning down exposure in these concentrated bets which they have for a while, and they're actually getting into more diversified portfolios. So that's the reason you have seen a lot of people have participated in new age company, they have participated in the IPOs. Okay, so some of the time we also wonder why they don't participate in the secondary market where valuations are attractive, but there's a big queue. Any IPO comes, there's a big queue. Any block deal happens, even ITC, such a large deal got absorbed. Any block deal gets absorbed very easily. So some characteristic has changed, from a very concentrated holdings which these FIs were holding is now becoming slightly more distributed sort of thing, is much more diversified. So obviously they have to prune down these concentrated holding and buy towards a diversified portfolio. That's the reason you're seeing selling keeps on happening in these FI concentrated names.
Okay, just counting down to the close and just want to, highlight what the texture of the market today has been. Choppy, but definitely better off than what we saw yesterday, for instance. SBI, though, has drifted about 0.6% lower, is where it's headed in for. ICICI Bank, flat, although again, a very volatile ride for this stock too. L&T, which tanked about almost 6% yesterday. Today, again, that too has had a very volatile ride. That dip which came by intraday and then the recovery thereof hasn't seen any meaningful recovery from those session lows. Naresh, just quickly want your call on L&T, whether around those 3250, 3200 odd sort of levels, would you be a buyer if L&T were to decline more with the market?
So the last breakout for the stock was around 3100. So 3100, 3150 should be a strong support area. So that is where you would ideally like to buy, or one could start accumulating here and add more on the way down to 3100. But looks like we are getting into a consolidation, not expecting a fast runaway move here, but a slow and steady recovery towards 3500 is what I would expect. So it should be a slow accumulation on dips from here on.
So that's a view on L&T, but Naresh, a quick view on Intellect Design as well. At what level would you be a buyer, if at all?
So after such a price sharp volume uptake, one should wait it out. I would wait for some more, not buy on the first dip itself. Let us see where it falls, but move towards 750, 800, which is too far as of now. But that's the price point where a good entry looks like.
Right. Okay. Anand, we'll let you go on that note as well. Naresh, thanks as always for taking the time out.
If you like this video, then like, share and subscribe to ET Now.